Welcome to the 2024 Investor Survey by the BAI, the most comprehensive survey to date, with 111 participating German institutional investors managing over 2.3 trillion euros in assets. This is the first part of our video series where we provide insights into the current state of alternative investments industry in Germany. This year's survey includes not only institutional investors but also, for the fourth time, BAI member companies, asset managers and service providers, offering a broader perspective on the industry. One clear trend we see is that institutional investors have gained significant experience in alternative investments. Lack of in-house experience is no longer a major barrier. Looking at specific asset classes, we observe steady growth across almost all areas. Interestingly, for the first time, more investors have allocated capital to infrastructure than private equity, signaling a shift in priorities. Private equity, after years of stagnation, could gain momentum again next year. The one exception remains real estate debt, which has maintained a status quo. On a positive note, more investors are returning to hedge funds and liquid alternatives. Looking ahead, how might these allocations change? We can see that most investors plan to maintain their current strategies, but corporate privates and infrastructure stand out as clear winners with increased allocations expected. Although the real estate market is recovering from a difficult previous year, many investors are still cautious, with some planning to reduce their high exposure. Challenges remain, but they are more individual to each investor. Inflation and rising interest rates are no longer the primary concerns they were last year, and the denominator effect is no longer a significant issue for most investors. This was an overview of the current state of alternative investments. In the next part, we will dive deeper into each asset class, exploring their main drivers and how investors are allocating into them. See you next time.